Breaking economic news, the world financial markets were in retreat, and China economic growth stories, scary ones, filled the media skies in search of an audience, but the consumer did not go into hibernation. They headed instead to the mall in August, shopping till they dropped. The August personal income report was released in Washington this morning. Real consumer expenditures up 0.3% in July, and now today 0.4% in August. An absolutely rock-solid performance that cannot be argued with. This economy screams full employment. Even perma-bear New York Fed President Dudley, one of Yellen's inner circle of advisors, is saying in news headlines this morning that the economy is doing pretty well. A few weeks ago, we had his comments that a potential rate hike in September was less compelling than it had been after the August financial market turmoil. Looks like he's changing his tune. Maybe we should put the October 28 Fed decision date back on the table for a hike. We'll see if he can make it a live meeting that the market says is dead. He should be changing his tune because policymakers are over-risk managing the economy and risk tying future growth of the economy up in knots if they don't get rates up off zero. They've just about broken the only tool they have to guide the economy, leaving the Fed funds rate out in the woodshed to rust since 2008. What else? We almost forgot the Fed's preferred inflation measure, the PCE deflator for all goods and services that consumers buy, is out. The measure they have chosen never seems to find inflation out there, part of the reason Greenspan selected this indicator for the job back in the year 2000 to show how well he was doing and get long-term bond yields down. Anyway, it is the same. Headline PCE inflation is running 0.3% year on year, but it's not too low. It's only down there because crude oil prices tumbled to $40 last year. PCE inflation will move back up to where the core PCE inflation number is today, 1.3% year on year, in January next year. This is not a reason for the Fed to exhibit prudence, caution, and delay. Get on with it. Net, the consumer is running red hot, and their purchases are driving the economy fast enough to outweigh any concerns we might have had about the slowdown in the world economy. Coming in today, we knew from Friday's GDP report that real consumer spending was revised up substantially in the second quarter from 3.1 to 3.6%. Now we find that in the third quarter, spending is above trend again. The consumer purchases at the shops and malls across America running 3.3%, even if they don't spend a dime more in September. This is an economy that is not even remotely in the wake of financial crisis and recession. The recent stock market turbulence in August, those rocky seas, have had no effect whatsoever on consumer spending in America. This economy is strong. Rate hikes are coming. Bet on it.